Big day at the New York Stock Exchange. CAVA making its public debut, doubling in its first day of trade. So far this year, we've seen more than $7 billion in U.S. IPO proceeds, nearly matching all of last year. But keep in mind, this is significantly down from 2021, which saw more than $140 billion. That's according to Renaissance. Joining us now, NYSE President Lynn Martin. Lynn, great to have you on the show. I mean, 100% gain from where CAVA priced its IPO after the bell last night. We know it was heavily oversubscribed. Can we actually say there's a thawing now of the frozen IPO pipeline, or is this a one-off?
Thanks for having me on, Morgan. And I think today really shows the green shoots that are existing in the IPO markets. Obviously, as you said, CAVA priced above its range last night, 30 times oversubscribed, had an incredible debut when the stock opened, which continued throughout the day today. But let's not forget the strong debut of Kenvue earlier this quarter in early May of this year, which raised $3.8 billion in capital as well. So we're seeing a lot of green shoots here in a thawing of the IPO markets.
So in terms of what you're watching for, and I guess the conversations you're having with private companies that might be finally looking to go public right now, what do those entail?
Yeah, a lot of companies are looking for the signs that you're starting to see on the macro side. Clearly, yesterday's move by the Fed has caused the market to be very encouraged around the pace of interest rate increases. You're also seeing the VIX well below 20 again, which is a sign that the volatility has come out of the market. So those companies who have been in our pipeline, some of which have been in our pipeline for more than 18 months, if not longer, they're starting to have conversations with us about, okay, is now the time to start to gear up and go? And clearly, the IPOs that we've seen at NYSE this quarter alone are encouraging signs, and they're really leading those conversations with private companies.
But Lynn, I got to play on the other hand with you here. CAVA had a pretty low float overall. There aren't a lot of different IPO shares to choose from out there. And I was just talking to Ariel Cohen, the co-founder CEO of Navan, formerly Trip Actions, and he said he doesn't feel like the market is ready to give software as a service companies the kind of valuations that they deserve quite yet. How long is it going to take for some of those types of names to get convinced that are going to perhaps have an even bigger impact on the market?
Yeah, that's a great point. And it does really speak to on a sector by sector basis where you're starting to see the thaw. Clearly, energy, particularly anything around clean energy, the green energy transition, that is having a very positive reception from investors at the moment. Consumer, the two IPOs I mentioned, CAVA and Kenvue, are in that consumer category. That is where you're seeing the thawing as well. Tech still has a little bit of a ways to go, but we're really encouraged by the signs of demand from the institutional investors to even welcome a large IPO to the market.
And Lynn, are direct listings and SPACs just dead? Was that a moment in time that's passed? People just want the standard arrangement at this point?
Direct listings are definitely not dead. We're having a lot of meaningful conversations with our prospects about the benefits of direct listing, particularly since we amended our rules to allow for a capital raise alongside a direct listing last December. SPACs, we still think that's a viable way for a company to go to market. But what I don't think you will see is the influx of SPACs that you saw in the 2020-2021 sort of time frame. You're not going to see the sheer number that you saw in that time frame hit the markets again. Remember, SPACs have been around for more than 20 years. So that it was more the saturation of that type of coming to market. But we think SPACs are a very viable means for a company to go public in the future.
I want to shift gears here a little bit because the NASDAQ earlier this week announced a deal to acquire fintech firm Adenza for $10.5 billion. And we've seen this diversification happening for the exchanges in terms of finding newer, future, bigger revenue streams. How are you approaching it at the New York Stock Exchange and I guess at ICE, the umbrella company of NYSE more broadly?
Yeah, at ICE, we are really an all-weather name. We have a strong group of exchanges. We got our start in the commodity exchange business. Obviously, the acquisition by ICE of the New York Stock Exchange in 2013 was one of the benchmark acquisitions. But at ICE, we had pivoted to a diversification. ICE Data Services, which is the business that I came from, started in 2015. And more recently, we've made exciting moves in the mortgage technology sector, really diversifying our revenues to show that we are an all-weather name at the parent company.